So next up, we have Nicole from Coronation Fund Managers, and she will be speaking about AI stocks in terms of a global portfolio. So I shall hand over to you now, Nicole.
Great. Thank you so much, Trevor, for the introduction, and thank you for the opportunity to present. As you mentioned, I'll be discussing the role of AI in a global portfolio. I'll be covering why AI matters for markets, how Coronation uses AI in our investment process, and finally, how we separate the durable winners from the hype. At Coronation, we're excited by the opportunity. We're using AI in our work on a daily basis, but our philosophy remains long-term, valuation-driven, bottom-up, and research-led. I find that a useful way to demystify AI is to take a step back in time. You see, human progress has always been shaped by tools. Stone tools and fire shaped what humans could do physically. The wheel transformed transport, electricity reshaped cities, and the internet gave us the information economy. Now AI is the next step in that sequence. The thing is, AI operates on intelligence itself. It uses language, creativity, reasoning. And that's what makes AI so special, is that it increases the amount of intelligence that can be applied to almost any problem. And for investors, it's particularly relevant because AI changes cost structures, it changes consumer behavior, it changes competitive advantages, and also changes how capital is allocated. AI can change the economics of so many different types of businesses. And we're already seeing this play out in the real world. The world is committing real capital behind AI. The world is essentially voting with its wallet. Companies are investing in data centers, cloud computing, and AI infrastructure. In 2026, the annual capex investment across the top 5 hyperscalers totals $689 billion. Now that's the largest corporate capital deployment that we've ever seen in history. That's AI demand showing up in reported financial results, not just AI demand showing up in headlines. We're seeing Meta use AI to improve ad targeting and content recommendations. We're seeing Alphabet embed AI into search and productivity tools. AI demand for AI accelerators is changing the order books of companies like TSMC and ASML. But that's where investing in AI in global portfolios becomes more nuanced. We're seeing AI change the economics of so many different types of businesses. But the key question in whether companies can actually, get attractive returns from this huge amount of capital that's being deployed. I think that history gives us some important data points. Major technology shifts can create immense value. The biggest opportunities can come from the biggest changes. But the first obvious winners aren't always the final winners. In the early internet era, we saw companies early on attract huge amounts of investor excitement. But these didn't end up really being the durable winners. What we really saw were companies that were the ones that truly understood the second order impacts of the internet. You see, Amazon didn't just remain an online bookstore. Google didn't just remain an online search engine. We saw a similar pattern play out in the mobile era. Apple used the iPhone to strengthen its ecosystem in hardware, software, payments, and services, while previous popular handsets kind of lost relevance. Now today, in an AI world, we're seeing so many potential AI winners. companies in deep AI infrastructure, ones with AI-first cultures. We're seeing unexpected beneficiaries and even finding value in some misunderstood disruptees. And I'll talk about those in more detail later on. But bringing us to Coronation's investment philosophy is where I'd like to go next. Despite the changes in technology and market structure, our core philosophy has not changed since inception since 1993. We are long-term, valuation-driven, bottom-up stock pickers. Our proprietary in-house research is the core of our investment process, and stewardship remains deeply embedded in how we think about ownership. This philosophy is so important in an AI world because technology can create a false sense of security. We have so much more information coming at us at much greater speed, but that doesn't replace human judgment. If anything, it makes human judgment more valuable. So the way we apply our philosophy to AI is these 5 principles. First, be paranoid. Assume AI may affect more businesses than you expect, so continually question your assumptions. Second, stay humble. Forecastability is low when paradigms shift, and it's impossible to know exactly how AI will shape every industry. So being curious is more important than pretending to know the answer. Keep an open mind. Digital winners are not automatically AI winners, and some companies that seem old school might actually be more resilient than what the market expects. Don't manufacture conviction. Sometimes the right answer is to pass when the range of outcomes is simply too wide. And lastly, we need to make sure that we think beyond first-order effects. Second-order effects may matter most when it comes to generating alpha, and this is where we focus. We think about AI as having 2 roles, and one matters far more than the other. The first is that AI helps us as investors become more efficient. It lets us do our work at a much faster pace. For example, if I'm meeting with the management team of Nubank, AI will help me automatically gather data that I need much faster than before. It can collate previous earnings releases, broker concerns, company management comments on credit risk and product adoption. And this is also useful, but it's also become the minimum expectation. I think the second role of AI is much more important, and it's how AI helps us become better investors. AI helps us challenge our thesis and find holes in our thinking. It can help us build a strong bull case and strong bear case. It can help us spot signals across thousands of data points. And this is where alpha comes from, in improving our human judgment. And this is where we focus, not simply on doing the same work faster, but focus on improving the quality of investment decisions. Now, the quality of any AI system really depends on the quality of the data and the quality of the question being asked. Simply put, what you get in is what you get out. And that's why Coronation's decades of proprietary research and access to vast external resources is so valuable. We get real value from actually putting these together and helping them be more useful to our investment team. Public AI tools are available to everyone, but the real value comes from combining good models, proprietary research, and experienced investment judgment. The biggest opportunity may actually be in better human judgment. You see, investing is analytical, but it's also very behavioral. All of us are vulnerable to confirmation bias, to anchoring, overconfidence, and groupthink. Say we're analyzing a business like Booking.com. where AI could fundamentally change the OTA industry. AI can actually help us build both sides of the debate. It could help us assess the risk that AI disintermediates OTAs and that it reduces traffic to their websites. But it can also build the counter-argument that trusted inventory, scale, and execution really still do matter. The best use of AI is not passive delegation. I strongly believe that the best use of AI is active co-creation. The analyst still needs to know the company. The portfolio manager still needs to make the final decision. So human judgment remains central in investing. What AI does change is how we assess companies. We look at every company through an AI lens, and I've grouped them in 3 buckets: AI winners, AI resilient, and AI at risk. AI winners are those where AI can be used as a force multiplier. AI resilient businesses are ones where AI possibly improves efficiency, but most importantly, it does not replace the business moat. And AI at risk are businesses where AI can fundamentally weaken the business model. What's most important is that for every company, we ask whether AI strengthens, leaves intact, or erodes long-term economics. And crucially, what is already reflected in the price. And when we apply this AI lens to our huge investable universe, we see the opportunity set is much broader than what you'd consider to be the obvious AI winners. Where we see opportunity is both in potential AI winners and AI resilient compounders. Looking at infrastructure, we see opportunity in TSMC and ASML because these are businesses that provide the foundation that allows AI models to be trained and deployed at scale. We see opportunity in AI-first cultures in businesses like Alphabet, Meta, Tencent, and Nubank. These are businesses that deeply embed AI in their products and processes to help strengthen their competitive position over time. Looking at AI resilient compounders, these include ones with extreme physical complexity. For example, Airbus and Rolls-Royce. These are businesses that just can't be disrupted to the same extent by AI that a digital business could be disrupted. Business where trust is hugely important or businesses that are heavily regulated are often AI resilient. Companies that have strong brands or data-rich platforms are AI resilient compounders because their moat is not eroded as a result of AI. We also see businesses that face huge AI risk signals. But this doesn't mean that these are necessarily uninvestable businesses. It just means that the bar is higher. These businesses are risky because AI can unbundle their value proposition. These businesses are risky because the data moat may be weak or easily replicable. Their knowledge work could be easily commoditized, or AI may result in their pricing power being eroded over time. So if we do choose to invest in these businesses, they need to fit the Coronation filter. They need to be attractively valued. We need to have a clear positive investment thesis based on our deep proprietary research. And this business needs to have a management team that is strong and able to adapt. We're specifically looking for businesses where AI can improve long-term economics, or where the market may be overestimating the AI disruption risk. To conclude, AI is one of the most important changes we're seeing in global markets. AI is real. Capital, adoption, and revenue pools are already visible, but selectivity matters. At Coronation, our response is not to chase AI indiscriminately. It's to use AI to improve our own research and judgment and to apply our long-standing philosophy with even greater intensity. Thank you.
Great, Nicole. Thank you very much for that extremely interesting presentation. And it was really interesting, as I think it was a different take on AI. And you certainly, I think, put into perspective how Coronation is tackling it. Just perhaps a couple of quick questions. In terms of this whole rise in AI stocks, and we know that they've continuing to really give amazing share portfolio performance, at least in the first sort of quarter of the year. Are we in, do you think, a structural long-term trend with these AI stocks, or is it more a shorter-term momentum cycle type of a play? How is Coronation looking at it?
Thanks for the question, Trevor. I think the right answer is a bit of both. I mean, AI is clearly structural. The CapEx, the adoption, the revenue pools that we're seeing, they are real. Markets can be right about a theme, but they can also be wrong about the price. I think we've seen that leadership is very narrow, expectations are extremely high, and not every AI-linked company will see attractive returns on the huge amounts of capital that they deployed. So the way we think about it is that AI is structural, but change can still be mispriced. It means that exposure to AI is important, but selectivity matters, and more importantly than ever, valuation discipline matters.
So Nicole, on that, and perhaps just to follow up, outside of the AI stocks, where then is Coronation finding opportunities? So in which parts of the market would you say is currently underappreciated by shareholders?
Yeah, thanks. I think that's a really good question, Trevor. I mean, we've seen valuations increase for the obvious AI winners, the ones in infrastructure, but Coronation even still finds value in the AI infrastructure place, but maybe deeper in the value chain. So in data center supply chains, in equipment, cooling, and networking, I think there are great opportunities that are still mispriced. In addition, we're seeing opportunity sets that are more broadly exposed to AI. So not necessarily the picks and shovels, but companies that are really able to truly use AI to embed into their culture, embedding AI in how they evolve their products, evolve their processes, and essentially use AI to strengthen their competitive advantage.
Great, Nicole. Thank you very much. We really appreciate you making the time to speak to us this morning. Really interesting comments, and Coronation certainly, I think, is doing a great job in terms of your global portfolio. So thank you very much and appreciate your insights.
Thank you so much, Trevor. It's been a pleasure.